5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. In cooperation, President Trump says the U.S. and Venezuela are working well together and says he has cancelled a previously expected wave of attacks. The Supreme Court convenes, markets keenly watching whether we get a ruling on reciprocal tariffs later today. And investors brace for a fresh read finally on the labour market, with the whisper number for today's non-farm payrolls at 66,000 jobs created in December. So markets look to be pricing in some risk at the moment. Futures are pointed higher. Yesterday the S&P finished flat. The Nasdaq was actually down 0.6% thanks to tech. The SOX index down 1.8%, although broadly defence companies did well and that sort of held things up. But we are still on track for gains for the week. First week of the year for the major indices. It's all going to come down to that non-farm payrolls report and then of course any potential SCOTUS ruling on tariffs. Bond universe-wise, we are seeing a lift in yields right across the curve. A couple of basis points here at the 10-year yield, 418.70. We are still in that range though, between 410 and 420. We haven't tipped that ceiling of 420 quite yet. We're back to 350 plus though on the 2-year. And then I just want to point to a Goldman call on copper as well, saying that perhaps we've seen the peak, that prices may actually come down, that President Trump is likely to potentially delay tariffs on copper later this year in what's now becoming a very obvious affordability push. All right, let's get to some individual movers now. Over to London and Valerie Teitel. Valerie.
Good morning, Bonnie. And speaking of that affordability push, we are seeing home lenders rocket higher in pre-market trade off the back of the post from President Donald Trump about asking Fannie and Freddie to buy $200 billion worth of mortgage bonds as the Trump administration targets affordability on housing. We're seeing Loan Depot rise 19% in pre-market, Open Door up 8.25%, and Rocket Mortgage up over 6% on the back of this announcement from the U.S. president. Moving over to the auto space, another write-down when it comes to a change in EV production. General Motors announcing an additional $6 billion worth of a write-down. We're seeing GM fall just shy of 1% in pre-market trade. Vonnie, some of its competitors also have listed write-downs for the rollback of their EV production, and this comes as the Biden-era green policies has been mostly rolled back by the Trump administration, and that EV tax credit came to an end last year. Lastly, let's head to the red-hot biotech space. Financial Times reporting that Merck is looking at a purchase of Revolution Medicines. The cancer drug maker is higher by nearly 16% in pre-market trade. Merck has been on a buying spree lately, trying to fill the revenue hole lost by one of its recent cancer medicines losing patent protection. Revolution Medicines does have a market value of near $19 billion, so it would mark yet another blockbuster deal in the pharma space this year. Bonnie?
Yeah, and the stock seeing that nice pop. Valerie, thank you so much. Valerie Teitel there in London. And coming up this hour, we'll count down to the payrolls report. Veronica Clark of Citi joins. But first, this just in the last hour, President Trump has given an update on Venezuela, writing on Truth Social, quote, Venezuela is releasing large numbers of political prisoners as a sign of, quote, seeking peace. This is a very important and smart gesture. Because of this cooperation, I have cancelled the previously expected second wave of attacks, which looks like it will not be needed. Let's over to Washington now and speak with Bloomberg's Kasia Klimaszinska. So, Kasia, did we know that there was a second wave of attacks planned for Venezuela?
Already a busy Friday here in Washington, D.C. President Trump, as you mentioned, posted on Truth Social just within the last hour. So we knew that the ships and the armed forces are in the region, that the U.S. is maintaining its posture. And President Trump says it will remain so, but there wouldn't be the next wave of attacks that he called expected, because he praised Venezuela for releasing prisoners, calling it a smart step. So this is another sign that Trump wants to work with this interim government in Venezuela. In the same Truth Social, President also mentions the meeting that he has with the oil executives here in D.C. today. That will be at 2:30 p.m. at the White House. Almost 20 executives coming over to discuss what Trump described as more than $100 billion of investment into Venezuela to boost its energy sector.
Yeah, and from what we gather, it's not just U.S. executives either, Kasia. It's going to be fascinating Just on Venezuela, Trump meeting with opposition leader Maria Corina Machado next week, apparently. This potentially could signal trouble, no, for Delcy Rodriguez?
That was surprising. Trump mentioned for the first time yesterday in an interview with Fox News that Machado is coming here to D.C. next week, and he's looking forward to meeting her. Still, he has voiced a lot of skepticism about her, and he has said that he himself and Secretary of State Marco Rubio is talking to the current interim president of Venezuela, Delcy Rodriguez. So I think the collaboration will mostly happen with her, especially as, again, Trump really wants to rebuild this oil sector in Venezuela. He wants to send the U.S. international companies there and start pumping that oil.
Kasia, I can only imagine the anticipation in Washington, D.C. today, and it's not just the non-farm payrolls report, it's also the potential SCOTUS ruling. Tell us what's happening. They're definitely meeting, and we may get a decision, right?
As soon as at 10 a.m. today, but maybe later. Today is just the first day that the Supreme Court has the chance to rule on this key part of President Trump's economic agenda, the global tariffs that he imposed in April of last year, between 10 and 50%. I'm sure you remember stocks plummeted back then. So this could be a big risk event today.
Yeah, we will be waiting for those headlines. And then, of course, we also got another affordability push yesterday with Trump directing the GSEs, Fannie and Freddie, to buy $200 billion worth of mortgage debt. What's the thinking here? It's not going down that well in the market. People saying spreads are already tight at 22 basis points. This won't do much.
Affordability, exactly. This is the word of the year, at least here in the US, as President Trump is trying to bring down the cost of homes, makes homes more affordable for average Americans. He announced several steps this week. First of all, he said that corporate investors should not be buying up those homes. And now he is delegating Fannie and Freddie to buy those bonds in this effort to bring down the cost of mortgage for an average American. Those costs are, of course, elevated because interest rates are still high. But on the margin, I think it might make a little bit of a difference, especially as Trump and his administration said that they will announce more. And most importantly, he's about to announce his new Fed chair that he will expect to cut interest rates.
Yes, he said he's already made his decision but hasn't told anybody. Kasia, thank you so much. Kasia Klimaszinska there in Washington. Investors also obviously keeping a close eye out for the payrolls data, 8:30 Eastern. Bloomberg's Sylvia Westall joins us now. So, Sylvia, we had a slew of data this week already, but we're still in a range, at least on Treasuries, that 10-year is still under 4.20. What would we need to see today in order to break out of that range?
Sure. Well, the expectation in the market is that it will be quite a good jobs report. They're seeing a stabilising of the job market. So anything that goes against that, we could see a reaction here. I think it's important also to see that coming into this, the market's positioning. People have been buying short-dated debt and they've been staying away from long-dated debt. So there's been this trade that's been there, and people have been holding on to that trade towards the end of 2025 and have been coming into this year. This is really the sort of first data that can really give us some kind of direction going forward. And the expectation is that the Fed will hold coming in, but there is, big question marks over what this data could bring. If we're seeing a weaker jobs market, then it could kind of raise expectations that it could be a cut. Otherwise, the market's expecting that further out into the year. So it's really about how this market that's been very range-bound, as you've mentioned, is going to react to this data, as well as the inflation data coming next week into the market and what implications that has.
Sylvia, you talked about positioning, and traders seem to have been positioning for a potential drop in the 10-year below 4%. What is behind that impetus?
Sure. I think it's the expectation there that further out we are sort of in this cutting cycle as it goes forward. But as you mentioned also previously, there are a lot of unknowns coming in now. We've got the Fed chair, which has meant people are expecting this dovish pick coming in. We've also got the tariffs coming in. That could be another kind of wild card coming in. So I think there are the expectations going in about the Fed. Gradually there's going to be more cuts coming along. But the question is, how quickly is that going to be happening, and at what pace, and what kind of magnitude are we seeing? So I think given all this, we have seen people trading within this careful range, but perhaps today is the beginning of when we're really seeing data that really gives kind of a kind of clear path for the market going forward, as well as all these sort of unknowns coming into play.
Sylvia, so many cross currents because we obviously might get the SCOTUS decision today on tariffs, and apparently tariffs have raised hundreds of billions of dollars for the Treasury, right? So they might have taken a little bit of the pressure off. If the Supreme Court decides against the tariffs, will we see an immediate market reaction, particularly in Treasuries and even the dollar?
Yeah, I mean, what we've seen there was kind of reactions to tariffs news last year earlier on, but right now some of the moves have become more muted. So there could be a sort of an initial move there, but generally it's something that will kind of focus more on the longer dated US debt. But as a whole, we're expecting maybe to be a slight blip, but going forward, tariffs news has had less kind of impact on the markets going forward. But again, it throws that into the mix as well. It's again another unknown that's going forward.
Exactly. Today could be just one of those days. Sylvia, thank you so much. Sylvia Westall there. Now to other top stories trending on the terminal this morning. Iran has restricted internet and phone access overnight in an escalation of its attempt to quell protests. Thousands of people appear to have taken to the streets across the country, including in the capital, Tehran. Iran's supreme leader says his country won't back down against mercenaries or those who engage in vandalism. Russia says it struck western Ukraine using an intermediate-range ballistic missile known as Oreshnik. Ukraine's foreign minister has described the attack near the NATO border as a grave threat to European security. Russia also launched hundreds of drones targeting Kyiv and the surrounding area. And China's consumer price growth accelerated last month due to higher food costs as deflationary risks stalk the world's second biggest economy in the absence of more forceful stimulus measures. Producer prices fell 1.9%. That was their 39th straight month of declines, while China's core CPI grew 1.2% for the third straight month. Coming up, a beat for TSMC. Investors breathing a sigh of relief on the chipmaker's sales. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. TSMC boosting hopes of continued global AI spending this year with an upbeat outlook. Let's bring in Tom McKenzie for more. Tom, so we get full results obviously next week, but we got a little glimpse into how TSMC did at least last quarter.
Yeah, Vonnie, and as we've discussed through this week, if you combine what we've seen in terms of the numbers from TSMC, that key owner of those foundries, of course, that actually crunch out the chips, and what we heard from Jensen Huang of NVIDIA and AMD's boss, Lisa Su, of course, at the CES in Las Vegas, what we hear from all of those parties is that the demand continues. So the top line numbers coming through for TSMC, very strong indeed, coming in above the estimates in terms of what they've been able to ship. They're likely also to have gotten a boost from pretty strong demand for iPhone 17s as well, because they produce those. But it is the GPUs, it's the data center piece that, of course, for the question around AI and the boom there is absolutely central. Top line numbers, 20% rise in quarterly revenue to more than $33 billion for TSMC, above the estimates. We'll get more details, by the way, Vonnie. January the 15th, we're getting an update from the executives. They'll give a bit more granularity. They'll talk about the demand picture, and importantly, they'll talk about CapEx as well. The team at Bloomberg Intelligence thinks the number could be around $48 billion that they could be spending on CapEx in 2026, and you're seeing that reflected in terms of the upside for some of the kit and infrastructure makers in Europe, the likes of ASML, of course, that makes the lithography machines, lifted in the session today on the back of the numbers coming through from TSMC. They are seeing no let up, TSMC, in demand for what they actually produce, the hardware, churning out those chips, GPUs, for data centers.
Unbelievable, but it's not unbelievable because it's in the data, right, Tom? Now, moving to XAI, we're hearing that Musk is burning almost $8 billion in cash. Can you tell us what we do know about what exactly is going on behind the scenes?
Yeah, and of course these two stories link together, don't they? Because Musk is spending heavily. A lot of that money is going on those semiconductors, on those GPUs, designed by likes of NVIDIA and actually produced and manufactured by the likes of TSMC. So a lot of spend is going in that direction for Musk. But you're right, the superlatives around the spend coming through from XAI are pretty significant. Close to $8 billion in the last 9 months, 1.4, close to 1.5 billion in the most recent quarter. What we're expecting to see from XAI is this focus, particularly on software, AI software, agentic software that can be parlayed and built into the humanoid robots that the company is making as well. So that is really their aim. It's the humanoid robots, it's the software that goes with that, but they're having to spend heavily on not just the chips, not just the GPUs, but also the talent as well, and the data center build out for those aspirations. Recently, of course, XAI raised about $20 billion from the likes of Nvidia. There's the circularity question for you. And they are valued about $230 billion. They have a bit of runway. They've probably got a runway for another 12 months to spend, but you're right. They're burning a lot of cash. Revenues have increased, so that's the upside coming through from XAI, but a long way still from profitability.
Tom, thank you so much. Fantastic reporting. Tom McKenzie there, host of Bloomberg Tech Europe. Mining shares in Europe also on the move, with Rio Tinto falling and Glencore jumping as the two discuss a tie-up to create the world's biggest miner. The new entity would have a combined market value of more than $200 billion. Now, the news today comes a little over a year after earlier talks collapsed. Joining us is Bloomberg's Mark Burton, who leads our EMEA mining and metals coverage. So, Mark, I feel like I have this conversation at least once a year, right? The deal collapsed a year ago. Why would it work now?
It's a very good question, and I think there are very significant hurdles still. This is a kind of a very preliminary discussion that the two companies are having. There have been some changes in the underlying markets, though, particularly copper and coal, and I think that those are the two things that everyone is looking at. Copper is underpinning the logic of the deal. Prices have soared above $13,000 this week. If you kind of look back to 2024, when they were discussing this kind of deal, before, copper was around $9,000 at the back end of the year. Importantly, though, we were also in the kind of back end of a massive rally in coal prices, and Glencore's portfolio is copper heavy and it's coal heavy, and Rio might love the copper, but there have been widespread expectations that it would view the coal portfolio much more dimly. Glencore executives are keen on coal. I'm sure they would have been asking for a fairly rich price for it at the time. Yeah. One key question is whether on both sides there's a bit more of an alignment on what to do with the coal business.
Yeah, because Glencore just fairly recently bought Tech Resources coal operations, right? So it is sort of expanded in coal. What about antitrust concerns? Would there be any in any jurisdiction?
Yeah, I think that's the other thing that has it's a continuation of a long-running trend, but it's hard to overstate how important copper is at a geopolitical level, and I think there's kind of widespread recognition that it's one of the most important industrial commodities for the 21st century, and it's also one that's facing acute supply constraints. China in particular faces a big import reliance in the sort of supply of primary copper ores. It has looked closely at Glencore's deal to buy Xstrata way back in 2013, and it extracted some the sale of one of its core copper assets, and also a long-term deal for Glencore to supply copper to China. That again is a key dynamic in any potential deal that might arrive. At this point, things are so preliminary that it's difficult to know how any regulator might react. Similarly, investors at the moment are just asking exactly what the terms of the deal might be, and then we'll have a little bit more clarity as to whether investors and regulators will feel it's a viable thing to be done. Yeah,
it's always fun to watch a deal in the works, right, Mark? Mark Burton, thank you so much. Yeah. Coming up, more agents head to Minnesota as the U.S. takes over the shooting investigation. A look at what's making headlines in your front page news next. This is Bloomberg. Time now for your front page news. First up on the New York Times, it's leading with reporting that at least 100 more federal agents have been deployed to Minneapolis in the wake of the fatal ICE shooting. The state of Minnesota has withdrawn from the investigation because federal officials have denied it access to evidence. At least 1,000 people marched through Minneapolis streets after dark, chanting and waving protest signs. Next up, the Washington Post reporting President Trump suffered a day of Republican defections in Congress Thursday. At least 24 Republicans voted with Democrats to defy Trump's will in House votes to overturn 2 of his vetoes. And in the Senate, 5 Republicans joined Democrats in advancing a resolution blocking further military action in Venezuela without congressional approval. And finally, from the BBC, Colombia's President Gustavo Petro says there is now a, quote, real threat of U.S. military action against his country. The remarks suggest relations have not significantly improved even after that phone call with President Trump Wednesday, after which Trump said he would meet Petro at the White House in the near future. And I just want to bring you some breaking news. Rio Tinto said to be open to owning coal assets if it buys Glencore. That was one of the questions we were just asking. Investors obviously asking it as well as analysts. Glencore now happy with the idea that Rio Tinto would want to own its coal assets. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. In cooperation, President Trump says the U.S. and Venezuela are working well together and says he has cancelled a previously expected wave of attacks. The Supreme Court convenes, markets keenly watching whether we get a ruling on reciprocal tariffs later today. And investors bracing for a fresh read on the labour market with the whispered number at 66,000 jobs added in December. So let's take a look at those markets now. We are seeing futures higher after a day of no gains, no losses yesterday for the S&P 500 and a day of declines for the Nasdaq 100, primarily though on tech companies. The SOX was down 1.8%. The Russell 2000, which has hit a record this year, the others haven't so much. We are still on track for gains this week though for all of the major indices, unless we see something change radically today. Now, Economist surveyed by Bloomberg anticipates 70,000 positions added to the U.S. economy in December, but as you heard there, the whisper number is slightly lower than that. So if you look at yields, you are seeing higher across the board, particularly there at the 10-year yield. Still not reaching 420 though, still in that range. And then in terms of metals today, we are seeing gold down just about $8, Bitcoin just above $90,000. And copper, well, Goldman has an interesting call on copper today, saying that President Trump is likely to delay a decision on tariffs into next year because of his affordability push. All right, let's get to some individual movers now. Over to London and Valerie Teitel. Valerie.
Good morning, Ivani. Let's start with that affordability push from the White House. President Trump tweeting that he has instructed Fannie and Freddie Mae to buy $200 billion worth of mortgage-backed securities, and that lowering of mortgage rates is seeing the likes of mortgage lenders such as Loan Depot surge in pre-market trade, up nearly 20%, Open Door Technologies up nearly 8%, and Rocket Mortgage up 6.8%. This is the latest in the string of moves from the White House to target affordability in the housing sector, and it's looking like it is setting these lenders alight this morning. Let's move on to the auto space. General Motors adding to its write-down from its production shift away from electric vehicles, another additional $6 billion worth of a write-down. We're seeing shares of GM head lower in pre-market, just shy of 1%, but it does follow a string of some of its competitors like Ford, who have also come up with big write-downs as they shift away from EV production as the Biden era green policies are rolled back and that Trump EV tax credit was ended last year. Lastly, let's end in the biotech space. Revolution Medicines, this is a cancer drug maker, is coming into the eye for Merck. The FT reporting that Merck is looking at buying the cancer drug maker, and the shares of Revolution Medicines are headed higher by nearly 16% in pre-market. Now, Revolution Medicines, Vonnie, has a market cap of around $19 billion. So if this deal does come through, it would mark another big deal in the biotech space in the last few months. Vonnie?
Yeah, very major deal. Valerie, thank you so much. Valerie Teitel there in London. 3 hours away now from the December payrolls report. Michael McKee is here with us to take us through it. Can we depend on this data? Is it reliable? Are we finally getting to a place where we're seeing a real picture of events?
Well, happy Jobs Friday, and we're hoping that it's reliable enough to at least come out at 8:30, and then we'll see what the numbers, 8:30 Wall Street time. The forecast is for a slight rebound in hiring after a couple of weak months that were distorted by the government shutdown. 70,000 jobs overall. On the private side, 75,000, as we still continue to lose government jobs. People maybe delayed in filing for unemployment benefits or something that pushed them out. Unemployment expected to fall to 4.5% from 4.6% last month, but the question here is really going to be in the rounding. Nobody really thinks we're going to have a big move, but we could round down a little bit in a reversion to the mean. I know that Veronica Clark is here, and she's going to tell us that we're all wrong. Unemployment's going to go up. What you want to watch today, Vonnie, is the unemployment rate, because it is the key number for the Fed. We see volatility in the jobs created numbers and a lot of changes in terms of which sectors are hiring, but it's unemployment that doesn't change on a month-to-month basis, doesn't get revised, so the Fed watches that. We'll see what the revisions are. I think it says decisions, that's my mistake. Revisions to October and November, and then the change in the labor force. And as we were talking about the composition and breadth of the job growth. If we do have job growth, is it concentrated only in health and social services, basically, or do we get some jobs in other areas?
And of course, if the unemployment rate moves up or down, it matters why it moves, right, Michael? What part of the...
Yeah, that's an interesting point, because what we have seen, surprisingly, is that the labor force has continued to grow. More people have been coming into the labor force, which is usually a sign that there is that people haven't lost confidence in their ability to get jobs, but it also makes the denominator bigger, so we see a rising unemployment rate. And so we'll see how that plays out today. If you see a contraction in the labor force and you see unemployment going up, that's a bad signal. But 8:30, we get Wall Street time, we get the numbers, and 8:31, I think we will get the Wall Street decision on whether they think the Fed is going to cut rates in January.
8:30, I think, more like it. We'll also be watching wage growth, of course, as well. Michael McKee there will be with us all day long to take us through the numbers and give us context and explain everything afterwards as well. Joining us now, though, is the aforementioned Veronica Clark, US economist at Citi. She's looking for 75,000 jobs created and an increase in the unemployment rate to 4.7%. Michael pointed this out because it is pretty unusual. There are not that many, if any, others looking for an increase in UE.
Yeah. I think what we could see in this report is actually maybe somewhat similar to what we saw in the September jobs report. That was, of course, before all the government shutdown issues. What we saw then was strong seasonally adjusted job growth. So we're expecting 75,000 payrolls. I actually wouldn't even be surprised if we see something stronger, maybe even closer to 100 or over 100.
Wow.
But what we also saw in that September number was the participation rate rose and the unemployment rate rose with it. I think we'll see something similar in December. But I would caution that, just because the unemployment rate is rising, because participation is higher, you should still take that seriously. That is still a higher level of unemployment than we were maybe expecting a couple months ago.
For sure. I mean, if more people are participating but they're not getting jobs, then that's not exactly good.
Yeah.
What would we need to see? Would that be enough to see a movement from the Fed in January?
I think so. I think so for a couple reasons, because that then looks like a very consistent increase in the unemployment rate. That essentially would be new highs for the unemployment rate this cycle in, I think, August, September, November, and December. That's a pretty consistent increase at that point. And then number two, there has been some doubt around that 4.6% unemployment rate in December. Maybe there were measurement issues, government shutdown related furloughs or things like that. I'm actually of the view that there was not much of a shutdown effect in that number. So I think if the unemployment rate rises, even if it stays at 4.6, that's good confirmation that that was a true increase in unemployment we saw last month.
What makes you so convinced that there wasn't a shutdown impact?
Yeah, so we know there wasn't a shutdown impact from federal workers themselves. The BLS did tell us that. The government reopened that reference week and those people were counted as employed. Maybe there could be some government contractors and things like that. There was an increase in temporary unemployment, but not to an abnormally high level, kind of like levels that we saw over the summer. I don't have big reason to believe that that would be shutdown related, because it didn't seem like there was a big increase in contractor claims or in payrolls. In a weakening labor market, you will see higher unemployment among every group, including temporary layoffs.
Will the Fed's next decision really hinge just on the unemployment rate, though, or will they also be looking at wage growth and whether it's slowing or even speeding up?
Yeah, I think the unemployment rate is the most important number here for sure. But of course, there are those inflation concerns. We will have CPI data next week, which is going to be even harder to read because of shutdown-related issues. But we saw in December that, yes, risks for inflation are still on the upside. upside, but Fed officials are getting a bit less concerned about that upside risk. And if we see wages slowing today, which I actually think we will, that would be even more reason to be less concerned about that upside risk to inflation. So yeah, it's going to be the report as a whole for sure.
Now, Powell did make it pretty clear that he was, expecting to pause for a while. So I feel like it would almost be a U-turn if the Fed actually cuts in January.
Yeah, we're not pricing much for the Fed. I think it's only 2 or 3 basis points for that January meeting that's priced. Yeah, it would require some communication shift, but not necessarily a difficult one, because if the unemployment rate is higher and you weren't necessarily expecting it to be, you were already clearly more worried about the labor market in December. The last unemployment rate we had before that December FOMC meeting was 4.4%. If we see something like 4.7, you should absolutely be more concerned on the labor market.
The Fed chair had also been talking about how confusing this labor market is because it's not obvious what's going on from a demand point of view or a supply point of view. You say participation will be up. Will we get any more clarity on that?
Yeah, so the supply question is interesting. It's, we have had a lot of immigration policy changes and whatnot. Certainly supply has weakened, labor supply has weakened, but there are a couple things I think that should make you confident that labor demand is weakening too, and that is the unemployment rate rising, even if it's because participation is higher, but it is also wage growth. So we have seen wages slowing. Average hourly earnings in November did slow. The employment cost index, we had unit labor cost data earlier this week that was somewhat weak. That is also a good sign that labor demand is weakening more than labor supply.
Going into future months, then, if we do see a jobs report similar to what you describe, do you continue to foresee strength in creation and weakness in the unemployment rate?
Yeah, it's a really difficult year to forecast because we don't have any historical comparison that looks like this one. So we've never really had a scenario where the unemployment rate has just gradually increased for a couple year period at a time. Usually it rises pretty slowly and then it rises much faster. We do think the unemployment rate can move mostly sideways for the first half of 2026. Once we get to March, April timeframe, that's when we've had this residual seasonality that results in weaker data the past couple years. I would need to see hiring pick up, though, and we think that can happen maybe later in the year to feel comfortable that the unemployment rate won't just continue to rise more.
What parts of the economy do you think will hold up then? Will it be more manufacturing, services?
Yeah.
And what impact might any kind of SCOTUS ruling or any tariff change have on them?
Right. I don't know if we'll see any immediate impacts from if we do get any kind of tariff rating today, of course. What we've seen so far pretty consistently in the labor market data the last year or so is job growth is very strong in sectors like healthcare and education, and it's weakening in just about every other sector. I do think the weakening in the labor market, this pullback in hiring that really started mid-2023, it did start in more rate-sensitive industries, so manufacturing, small businesses. If the Fed is cutting more and sooner, which we think they will, then taking rates closer to that midpoint of the neutral range, maybe you can get some recovery in those types of sectors later this year.
Veronica, thank you so much for joining us in studio today. You heard it, folks, 75,000, maybe even as many as 100,000 jobs created by the unemployment rate ticking up to 4.7%. That's Citi and Veronica Clark's call. Now to other top stories trending on the terminal this morning. Rio Tinto is open to retaining Glencore's massive coal business if merger talks between the two companies are successful. The talks are about a potential combination of some or all of their businesses, with one scenario being a takeover of the whole of Glencore, including the coal business. Iran has restricted internet and phone access overnight in an escalation of its attempt to quell protests. Thousands of people appeared to have taken to the streets across the country, including in the capital, Tehran. Iran's supreme leader says his country won't back down against what he calls mercenaries or those who engage in vandalism. And Russia says it struck western Ukraine using an intermediate-range ballistic missile known as Oreshnik. Ukraine's foreign minister has described the attack near the NATO border as a grave threat to European security. Russia also launched hundreds of drones targeting Kyiv and the surrounding area. Coming up, President Trump called off a second wave of attacks towards Venezuela. We'll discuss next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Venezuela is working well with the United States. That's President Trump with an update early this morning. He posted on Truth Social, quote, Venezuela is releasing large numbers of political prisoners as a sign of seeking peace. This is a very important and smart gesture. Because of this cooperation, I have cancelled the previously expected second wave of attacks, which looks like it will not be needed. Back with us now from Washington is Bloomberg's Kasia Klimaszinska. This second wave of attacks, Kasia, were we expecting that they would happen? And I guess Venezuela is relieved that this is not going to happen now.
Exactly. Just after 4 a.m. this morning here in Washington, D.C., President Trump posted on Truth Social praising Venezuela for releasing prisoners and saying that this second wave of attacks perhaps won't be needed now. But he emphasized that the U.S. Navy, U.S. ships, Coast Guard are still in the region and could be deployed. Also yesterday, he spoke about possible land strikes against drug cartels in Venezuela. So that's still very much on his mind. But also on his mind is the oil production. He really wants the U.S. companies to go in to start pumping and selling oil. And for this, of course, they need stability. They need physical stability, being able to bring their people there, and financial stability, being sure that the dollars can flow. So President Trump is meeting oil executives at the White House today at 2:30 p.m. Nearly 20 executives from the oil industry will come and discuss with President Trump this opportunity for energy in Venezuela.
Yeah, we'll be looking for any outcomes that we can hear from that meeting. Now, also on the agenda in Washington today is that potential SCOTUS ruling on reciprocal tariffs. We actually might get a decision today, will we, Kasia?
As soon as 10 a.m., the Supreme Court is meeting, and it could rule on those tariffs either today or perhaps later this month. We know that the justices see this matter as important and urgent, as more than 1,000 companies filed lawsuits seeking refunds. They want their money back. They think that President Trump doesn't have this broad authority to impose blanket tariffs on goods imported from all over the world. Those tariffs were as high as 50% for some countries. So we might get a decision today, but even if, say, the court strikes down those tariffs, saying that Trump kind of abused his authority here, the court will most likely not say how those tariffs are supposed to be refunded. This will go back to lower courts. So we'll have a lot of uncertainty here that perhaps will hit not only the stock market, but also the bonds market, because, of course, the U.S. Treasury has to find this cash to issue those refunds.
Right, and also there are other avenues by which Trump could actually impose tariffs. Meanwhile, he's continuing with his housing push. He's telling Fannie and Freddie now to buy $200 billion worth of mortgage debt. I mean, this will increase the mortgage debt on their books at least, right?
Yes, but President Trump is pointing out that Fannie and Freddie are sitting on a stockpile of cash, so they could deploy this cash to buy mortgage bonds and lower the cost of a mortgage for an average American. This appears to be working. The market has already reacted to this post on Truth Social from Trump yesterday. And of course, the administration has other tools in their toolkit to try to bring down those housing costs. Trump also earlier this week urged corporate investors not to buy housing, saying that the homes are supposed to be for individuals, for families. And Trump still is yet to announce his new pick for the Fed chair. We know that he will want this person to cut interest rates significantly this year.
An exciting day and a few weeks ahead. Kasia Klimaszinska, thank you so much. Turning to tech now, U.S. shares of TSMC ticking higher after a revenue topped estimates. The company boosting hopes of continued global AI spending this year. Joining us now is Bloomberg's Shona Ghosh. So Shona, we'll get full results next week, but we did get a glimpse into what actually transpired for TSMC in the quarter, and it was pretty good, wasn't it? Give us the details.
It was. So, this highlights that TSMC, which is a chip foundry, is an essential part of the global semiconductor manufacturing supply chain. Its major customers are Apple, Nvidia. Nvidia, of course, continues to boom, being a core player in the AI growth sector. So it just goes to show how these sort of infrastructure or supply chain companies, their fortunes are very tied to the broader AI boom and leading players like Nvidia.
Yeah, exactly. And the company did seem to benefit from rush orders when it looked like tariffs was going to really impact them. Does that mean that that quarter was colored and that we might not see the type of sales in the next couple of quarters that we saw last quarter?
It's possible. It's hard to say. You know, that there are a lot of global impacts that will potentially impact companies along the supply chain, like TSMC and one of its competitors, Samsung. So, for example, the rare earth mineral shortage, the restrictions from China, you know, will raise prices, for example. So, you know, I think there are a number of things that could impact these companies' results. And as we've seen, you know, they're often very up and down, and revenues will go up one quarter, and investors will say that the AI boom is continuing unabated, down a little bit the next quarter, and there's fears of a bubble. So I think we can expect that sort of up-down momentum over the next few months for sure.
Yeah, and staying in the space, but moving slightly sideways, we also learned that Elon Musk's XAI has burned almost $8 billion in cash on this humanoid robot plan called Optimus. Can you give us some more details on that?
Yes, so in the first 9 months of the year, you know, Bloomberg reporters got hold of results, a call that XAI did with investors saying it's burned this much money in the first 9 months. It's a lot of money, and it's probably not going to hit its revenue expectations for the last year. So I think that's a sign that XAI, like many companies, is spending a lot on artificial intelligence related technologies, while not necessarily, you know, getting the revenue, the profitability as yet from those technologies. XAI also owns X, the social media network, and as we know, advertisers have been sort of slowly dripping away from X, so the revenue's not necessarily coming in there either. So like lots of AI companies, we're seeing a lot of hardware, software expenditure on that technology, but not necessarily as yet the profits and revenue coming in.
Well, he is going to spend until he has AI that can power this Optimus eventually. Shona, thank you so much. Shona Ghosh there for us in London. Coming up, the jobs report and a possible SCOTUS ruling. It's your day ahead. Next, this is Bloomberg. Now a look at what's ahead today. Payrolls coming in at 8:30 a.m. Eastern, just more than 2.5 hours from now. And then, of course, we do get New Michigan sentiment. That's at 10 a.m. Then the Supreme Court also convening for a public non-argument session at 10 a.m., which could mean a ruling on President Trump's tariffs. Plus, we get Fed speak from Kashkari, Bostic and Barkin throughout the day. Micro movers wise, Loan Depot, mortgage stocks rallying after Trump's purchase demands on Fannie Freddie, as you can see, up 20% now. Revolution Medicines, the FT, is reporting Merck is in talks to buy the cancer drug maker. And Intel up 2.4%. President Trump praised CEO Lip Bhutan after a meeting yesterday at the White House. This is your macro picture before the jobs report. Futures pointed higher, the dollar stronger, and the 10-year yield up nearly 2 basis points. Nothing to worry about, it seems. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.